However, with the other indicators below in the bearish territory, tomorrow I expect to see some downside towards that 54-55 cent level. And remember, just like I stated in last video, that move from 39 cents to that high of 75 was a 92% gain. So you should expect some type of pullback. And now that it's pulled back, you want to find some level to support and consolidate a little bit before it curls back up. That's why I say I could see tomorrow that it goes to 54 to 55 cent range and hopefully consolidates there to continue to the upside after it curls up. What's up, everybody? Welcome back for another video. Now, I gave you my price points yesterday, as you saw in the beginning of the video, on levels to watch. And today it did get down as low as 54.50. Right in between my two price targets, I said around 54 to 55 cents. I saw some bearish signals on the trading indicators on yesterday's video. And that's why I let you guys know that I would see some downside today. And we also had an FOMC meeting that took place today, adding to the volatility in the market and stocks. And that may have also contributed to Mullen Automotive's down pressure today. That blue arrow was the low after hours, and up at the top circled was the low during regular trading hours at 54.50. There's a clip at the end of the video showing you guys on the FOMC meeting on some things that was discussed, but ultimately Jerome Powell left rates unchanged as of right now. No press releases really to discuss in this video, so we're going to take a look at the chart and see what Mullen Automotive's price action is looking like going into next week. I have that red line at 39 cents. That blue trend line indicates a possible support that Mullen needs to hold around that 54.50 cent level if it can start to consolidate there. Otherwise, we may see a retest of 50 cents. And then from 50 cents, if that breaks, then we'll be heading towards that 39 cent level again. And this is what we want to see going into tomorrow, showing here on the screen. You want to see a consolidation around that blue trend line and start to try to curl back up. As you see the indicators down low, they are wanting to curl up along with the RSI. We will see if there's any more residual down pressure following the FOMC meeting. Ultimately, the shorts were able to recoup or gain some on the down pressure today. So there may even be a little bit of a green pre-market going into tomorrow. So by open, shorts can have another chance to attack again. Because like I mentioned, shorts want these levels that I have up for you down below to break. And the bulls want some consolidation in this level and for a curl back up towards a stab at that 75 cent level again. And this over here to my right, circled in blue, continues to happen with Mullen Automotive stock. That borrow fee rate seems to always go to 0% around 11.15, 12.15. Most of the times whenever it does that, there are more shares available to short. And as I mentioned before, what brokerage firm is out there enabling shorts and allowing them to borrow at 0% so they can have more shares to short against Mullen Automotive? To be this obvious of data manipulation really only signals that they are running out of time and they're running out of tactics to keep the stock down. Because how can a stock at one point be a hard to borrow stock with 26% borrow fee rate, then 15 minutes later it's the easiest stock in the market to borrow at 0%? So let me know what you guys think about that data, the price levels that I gave you all. Do you see Mullen Automotive consolidating here or continue to trend down? Is there something big coming from Mullen? Do you think shorts are running out of time? Let me know your thoughts down in the comments. Hope you guys find this information valuable. Be sure to hit that like button and subscribe for more content coming from me, and I'll catch you in the next one. I'm gone.
Federal Reserve holds rates steady, however, leaving the door open to one more hike as the committee remains committed to returning inflation to its 2% target.
That's why we look at 12-month. But I think in this situation where it looks like we've had a bit of a turn in inflation starting in June, we're also looking at 6 months and even 3 months, but really 6 months inflation. So you're looking at it over that period and over longer periods. That's the right way to go.
I also asked Fed Chair Powell what the Fed would do if they didn't get the inflation data, the jobs report data that they need for the next FOMC meeting if there were to be a government shutdown. He told me, quote, that they would just have to, quote, deal with that, and that it was hard for him to say in advance how that would really affect that meeting. Now, Powell did reiterate what he said in Jackson Hole, that the Fed is prepared to do further rate hikes if appropriate, and that they do intend to hold rates at higher levels until inflation comes convincingly back towards the Fed's 2% target. Certainly, we saw that in the Fed rate projections put out this afternoon. Now, Powell also said that real rates are in meaningfully positive territory, and the Fed would really need to keep them there to see inflation meaningfully come back down.
Go, go.